Well, this video will be the last of 2024. I'm going to be taking a week off and just visiting with family and enjoying the holiday season. Before I get into the top stories of the year, I just wanted to take a moment and thank two groups in particular. First off, and most importantly, to you, our viewers, the people who have tuned in some cases for many years now and follow the channel. You do provide us with the inspiration to keep going. The encouragement is very much appreciated. So thank you for that. Also, the second group I'd like to thank is those companies that joined with us over the past year to help sponsor the channel. And unbeknownst to a lot of people, it does cost money to run a channel like this and to put together the videos. So for those companies who did partner with us, we really appreciate that support. Now, on to the top stories of 2024. And yes, we are Canada, but the biggest story in my mind has to be the reelection of Donald Trump as the President of the United States and the economic policies that come along with that. No doubt that his return to the Oval Office will be transformative for U.S. economic policy, and that affects us very much so here in Canada. His administration, they've proposed measures that are aimed at the America First economics. So this includes corporate tax incentives. It includes increased scrutiny on foreign investments and the renegotiation of trade agreements. And the policies, they've triggered both optimism and concern depending on which industry you're in. When we think of sectors like fossil fuels and defense, they anticipate growth under deregulation there. But some aspects of technology, renewable energy companies, they will be facing some uncertainty over funding cuts and then regulatory rollbacks there. When Trump won the election, the stock market had a pretty good pop. It initially rallied on the election results, but it has showed some signs of volatility as these new policies have been announced. Analysts are warning of potential long-term impacts, thinking specifically of the trade tensions with allies and the risks of inflation. Now, also related to this is Trump's announcement of the potential for 25% tariffs on Canadian imports that has sent shockwaves through North American trade. This policy is definitely aimed at protecting U.S. manufacturing, but it does risk destabilizing the economies of both Canada and the U.S., which are tightly regulated. When we look specifically at automotive, agriculture, the energy sectors, they're particularly vulnerable here given their reliance on so much cross-border trade. Now, Canadian businesses have already expressed alarm over potential cost increases, potential supply chain disruptions, and the Bank of Canada cited major uncertainty for its economic forecasts. And this threat of tariffs has also raised fears of retaliatory tariffs from Canada, which could just act to further escalate these tensions. Now, on the topic of tariffs, Canada over the year, they did join a global trend and they slapped 100% tax on Chinese-made vehicles, EVs, starting in October. And this too is designed to protect our domestic market here from an influx of inexpensive Chinese EVs. Now, major players, BYD, Tesla, they have been either eyeing now or utilizing the Canadian market, and they may need to think their strategies here. But it's obviously a clear signal that Canada is serious about safeguarding our automotive industry from foreign competition. Next up here, Canada's budget woes. The fiscal landscape here took a hit this year. Government overshot its deficit target by 50% and it landed at $61.9 billion. And according to the fall economic statement, this financial setback was largely due to pandemic-related spending and other unexpected costs. There were lots of other things that factored in there as well, but that's what they highlighted. The situation, big news, about a week or so ago, it did reach a tipping point when Finance Minister Chrystia Freeland, she resigned very abruptly and reportedly over disagreements with Prime Minister Trudeau on government spending. And her departure came just before the major fiscal speech, the economic statement, which added a lot of fuel to the fire there, and it raised questions about the government's economic direction. Now, speaking of government, the Bank of Canada's monetary policy was front and center this year. I want to take a quick look at what it was up to. Related here, the rate of inflation fell steadily throughout 2024. And in response to this moderating inflation, the Bank of Canada began cutting interest rates, a trend that is expected to last into 2025. We started the year with a target rate of 5%. Now we're sitting at 3.25% as the year closes out. And this policy shift is designed to support our economic growth. And it is just a very poignant reminder of how delicate this balance is here. The central bank has to make its decisions in, do we cut rates, possibly reignite inflation, or just do we keep supporting the economy as they seem to be doing here? And their ongoing decisions in the coming year will be pivotal in steering us through the economic challenges that we're seeing right here and the potential challenges that lie ahead. Now, I want to shift to Canada's economic performance. And our economy faced some mixed signals in 2024. And Q3, the most recent numbers out, we saw unexpected growth of 0.3%. This was driven by gains in energy production and retail sales. But the forecast for November, they did project a contraction due to slowing exports and manufacturing output. Then, of course, we see this looming threat of the U.S. tariffs, and that it adds another layer of uncertainty, complexity there. Now, another big story this year, big tech's alignment with political leadership. And we saw big tech leaders, including Elon Musk and Jeff Bezos, they signaled an alignment with the incoming U.S. administration, and they're anticipating, I guess, favorable policies and, of course, federal contracts. Now, this shift, it reflected probably a very pragmatic strategy to just sort of maintain or secure some regulatory goodwill to maintain their market dominance in their respective fields there. Now, critics do argue that if we look at the risks that go with creating such strong alignments like this, they do entrench the monopolistic practices and they undermine domestic institutions. And I do certainly agree with that viewpoint. When we look at the collaborations with big tech, the government, they also spark concerns about the influence of the tech giants on public policy. We're already seeing signs down there, especially in areas like artificial intelligence and even into defense. And there's no doubt that these alignments will continue to drive innovation, but we also have to be careful that we don't lose the checks and balances that are in place now to ensure fair competition. Now, another story this year, Klaus Flugbill. He is a German-Canadian resident of China, and he was sentenced to 24 months in jail for stealing Tesla's electric vehicle trade secrets, and reportedly he had planned to use this proprietary information to benefit his competing EV battery business. Now, as I close out the year and before I get to my next stories here, I would like to again thank BMO ETFs for being our lead sponsor in 2024. And I hope you've had the chance to learn more about their investment solutions as the year has gone by. For the last time here, I'm going to add a word about BMO. They say that investing is personal, and whether you're just starting out or whether you've been at it for years, your financial goals are unique to you. So maybe you're focused on diversifying your portfolio. Maybe you're just seeking a strategy that aligns with your values, like socially responsible investing. Well, BMO ETFs and mutual funds, they do offer solutions that are tailored to fit where you are in life and where you want to go. With BMO Global Asset Management's experienced professionals at the helm, you're not just buying into a fund, you're gaining access to insights that can help you navigate the complexities of today's market. This is more than just investing. It's about making your money work for you in the things that matter most to you. So you can discover how BMO ETFs and mutual funds can help you achieve what's important to you. Visit bmogam.com, so bmogam.com today. Now, another big story this year, especially the latter part of the year, is Bitcoin's resurgence. It had a great year, recently passed the $100,000 US mark. And as of the shooting today, it's trading just at over $93,000 US. Now, for the year, this cryptocurrency is up around 114%. Now, in Canada here, other places around the world as well, this rally has sparked increased interest amongst both retail investors and institutions. And we're seeing platforms like Wealthsimple, like CoinSquare, they've reported record trading volumes, and this indicates a growing appetite for digital assets. Also, several Canadian businesses have begun accepting Bitcoin as a form of payment, and this is another reflection of the broader trend of Main Street adaptation. Another big story for the year was the airline and travel industries, which had a remarkable recovery in 2024, where we've seen both air travel and cruise bookings now surpassing their pre-pandemic levels. So that's a really nice recovery story there. They attribute pent-up demand, an increase in disposable income amongst consumers driving this resurgence. Airlines have expanded routes. They've upgraded their fleets. Cruise ships have also launched new ships to meet the growing demand. Now, all that said, fuel costs, labor shortages, they do still continue to pose challenges to the industry, and industry leaders are warning that sustaining the recovery might require further innovation and efficiency improvements. The industry also has faced scrutiny over its environmental impact, and this has prompted investment in sustainable aviation fuel and energy-efficient technologies. That's another story to watch in the space as we move into 2025. In the year, Canada's Competition Bureau, they filed an antitrust lawsuit against Google, accusing the company of anti-competitive practices in the ad tech space. And this was a significant escalation in global efforts to regulate big tech. This lawsuit in particular alleged that Google had abused its dominance by restricting competition and controlling key advertising markets. And this does align with similar actions that we've seen both in the US and in the UK. And it highlights a growing consensus on reining in the monopolistic behavior of companies like Google. It could turn out, when we look back over the years and with hindsight as a benefit, that 2024 will have acted as a potential watershed moment for tech regulations with implications for other large players in the digital economy. Canada Post. No doubt you're aware that they had a nationwide strike during the year. Their strike disrupted mail, parcel deliveries across the country. It was driven by demands for better wages, better working conditions, and it was a continuation of the growing labor tensions that we're seeing in the public sector. Businesses that are reliant on postal services faced significant disruptions latter part of this year, which led a lot of them to explore some alternative logistics providers. We'll see how that plays out. Now, the federal government did end up intervening in this case by issuing back-to-work legislation, and that has drawn criticism from labor groups, from civil rights groups. The strike is just another example of this ever-present challenge of balancing labor rights with economic stability, especially in essential services. Now, if you subscribe to our weekly Pulse newsletter, you'll certainly have been witness to the various opinions when it comes to labor disputes. I put a couple of polls out during the year, and there were very strong feelings on both sides of that. Now, on the topic of strikes, Canada's major railways also faced labor disputes in 2024 that resulted in shutdowns, disrupted supply chains and trade. The disputes here, they were centered on wage increases, safety concerns. The unions were arguing that rising inflation had eroded workers' purchasing power. The government intervened here, mandatory arbitration to resolve the conflict, but the disruptions there just sort of highlighted or underscored the vulnerability of our critical infrastructure. Industries such as agriculture, manufacturing, they were particularly affected as railways, they're a lifeline for transporting goods across Canada to export markets. Another big story for the year was Canada's order to dissolve TikTok's Canadian business over these national security concerns. And that was a big move in this ongoing scrutiny, particularly of Chinese tech companies. Now, the government cited fears that user data could be accessed by the Chinese government, and that would compromise national security. The decision also mirrored similar actions in the US and in Europe, where concerns about data privacy and geopolitical tensions have fueled calls for stricter regulation of foreign tech companies. Loblaw, they faced a boycott as consumers launched a nationwide boycott over soaring food prices. And interestingly, the tipping point here was a Reddit group that spotlighted a $40.51 package of chicken breasts, and they took this as a symbol of the broader issues of affordability there. Now, there was backlash, but if you look at the share price of Loblaw's, it did continue to climb. Many shoppers, though, reported saving money by turning to independent stores or other large retailers. Now, we also saw a lot of shakeup here in the Canadian specialty television sector. We saw significant changes there with major players. Chorus Entertainment comes to mind here, where they underwent leadership changes and cost-cutting measures. In this case, the company announced layoffs and the closure or sale of several radio stations, and they cite a challenging advertising environment. This reflects sort of the broader industry struggle to adapt to the changing consumer behaviors and the rise of digital platforms. In the same field here, Bell Media, they underwent a significant restructuring. They announced the elimination of 4,800 positions, the divestment of 45 radio stations. The company here attributes these to declining revenues and new regulatory requirements. Also, Bell Media plans to rebrand several of its specialty channels. It has entered into new licensing agreements, including bringing the USA Network and Oxygen True Crime to Canada. Now, BCE Inc., the parent company of Bell Media, has been active in restructuring its portfolio as well. Another story that came out during the year. It sold its 37.5% stake in Maple Leaf Sports and Entertainment to Rogers Communications for $4.7 billion, and it announced plans to acquire U.S. telephone company Ziply Fiber for $5 billion. And BCE here is trying to realign its business focus and adapt to this ongoing evolution in the telecommunications space. So there certainly were many, many other stories that caught our attention this year, but these are some that came to my mind as I reflected on the year. Now, on our channel here, we have big plans for the channel in 2025. We have been reviewing feedback from you, our viewers. We have exciting plans, which we will be rolling out very soon. So we're really hoping that you'll be coming along for the ride with us. So for 2024, I'll sign off. As always, I do thank you so much for watching the videos. We'll see you next year.